XRP influencer named Jake Claver is putting it in the minds of XRP holders that XRP has a shot to reach $750 in 2025. So I needed to better understand what is Jake seeing here that maybe I'm not, so I can better explain it to you, because I'm getting comments, questions, and all kinds of people expecting crazy prices for XRP over the next 5 months. So let's better understand what Jake is seeing in the market, what needs to happen for this to actually come true, and if this is even a real possibility in my eyes. I'm gonna break it all down. You gotta hear what he's now saying about the $750. So Jake often talks about the XRP domino theory effect. This is his most popular videos and content, and this is what really brings people to his door. So let's better understand what he thinks is going to happen here. The macroeconomic shock, oil market, and Bank of Japan. The scenario is a spike in oil prices forces the Bank of Japan to raise interest rates, triggering the unwinding of the global yen carry trade, disrupting markets worldwide. The impact here would be tremendous volatility as leveraged positions funded by cheap yen unwind, affecting global equities and bonds, and the probability of this happening is moderate. Oil price shocks are plausible, but a full carry trade unwind is debated by economists. Now, I have a full breakdown of what the Japanese carry trade actually is and how it works. I'm going to leave that down in the description, because I feel if we get into this video is going to be like 30 minutes long. So if you need the information, it'll be down in the description. Japanese financial system and digital yen scenario. Japan, a major US Treasury holder, accelerates digital yen development. Domestic capital shifts from US Treasuries to support the digital yen, tightening global liquidity and destabilizing bonds. The market impact here would be capital reflux could cause significant stress in US and global credit markets, enhancing fears of liquidity shortages. The probability of this happening are low to moderate. Digital yen development is progressing, but a full-blown shift away from treasuries is unlikely without further catalysts happening. Jake often talks about the issues with Tether and Bitcoin, and if that unwinds, that could be a pretty significant moment here. So the scenario would be new US global regulations for stablecoins spur demand for fully backed assets, while investigations into Tether lead to market panic. Up to 2.3 trillion in demand for US Treasuries could emerge from the new rules. So what they're talking about here is the US needs a new buyer of US debt. The best new buyer of US debt is stablecoin issuers. They're talking about maybe $2 to $5 trillion over the next few years entering the stablecoin market. All of that would need to be backed up by US Treasuries. The market impact here, a Tether crackdown coupled with tighter stablecoin laws would cause funds to move out of risky stablecoins into regulated alternatives, possibly sparking a huge